Tesla stock had a huge rally up to $194. Today's news explains exactly why this happened and what you should be thinking about as a Tesla investor. Stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. The Fed indicated today an interest rate increase in December won't be as aggressive as previous rate hikes. This comes as great news to investors who have been hoping that the Federal Reserve would ease off of its rate hikes. Comments made by the Federal Reserve gave stocks a boost. Subsequently, Tesla's stock was rising this afternoon after Federal Reserve Chairman Jerome Powell said that smaller interest rate hikes will begin in December. That news caused market indices to jump, with the S&P 500 gaining 2.3% and the Nasdaq Composite rising 3.4%. And they took Tesla's shares along with them. The electric vehicle stock was up by 5.3% as of 3:34 p.m. Eastern. Speaking at the Brookings Institution today, Powell said that the Federal Reserve will likely begin smaller increases to the federal funds rate at its December meeting. Powell also said that the Fed's moves, including past interest rate hikes, will take time to slow inflation and that it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. Investors were very happy to hear that today, and they specifically lashed onto Powell's comments when he said that the time for moderating the pace of rate increases may come as soon as the December meeting. Growth stocks like Tesla have been especially vulnerable to the Fed's aggressive interest rate hikes as investors have worried that the Fed will end up pushing the U.S. economy into a recession. Tesla CEO Elon Musk has been concerned about exactly that and tweeted earlier today, before Powell's comments were published about the potential for a recession. While the Fed isn't cutting rates like Musk hoped, investors are happy to see that the severity of the increases will at least decrease. But Powell also warned that the Fed has more work to do. Despite some promising developments, we have a long way to go in restoring price stability, he said today. But with central bank officials now indicating that less aggressive interest rate increases could be on the horizon, many growth stock investors are celebrating the news today. Despite Twitter distraction, keep on buying Tesla stock, says Morgan Stanley. Do you think Tesla's share price drop is correlated to Elon Musk's Twitter endeavors? Most likely, the answer is yes, and if that is your reply, then it chimes well with those given in response to a recent Morgan Stanley survey. Firm analyst Adam Jonas says the banking giant asked a host of institutional investors and industry experts 2 questions. 1. How much of Tesla's recent underperformance do you attribute to the Twitter situation? And 2. What impact do you believe Elon Musk's acquisition of Twitter will have on Tesla's business going forward? For the former, almost 75% of respondents said they believe the Twitter situation has accounted for at least a significant portion of Tesla's recent share price underperformance. As for the latter question, 65% seem to think the Twitter acquisition will have a negative or slightly negative impact on Tesla's business going forward. Just 5% said they thought the Twitter acquisition will have a positive impact on Tesla's business. As for Jonas, he thinks the Musk-Twitter love affair could be detrimental to Tesla in a few ways, such as consumer sentiment/demand, commercial partnerships, and the support of government and capital markets. Yet, despite the ongoing Twitter debacle, Jonas is recommending investors load up on shares, and he lists the reasons why he remains in the EV leader's corner. Tesla is the only name we cover that generates a profit before incentives on the sale of EV. Tesla is the only self-funding pure-play EV name we cover and has achieved a unique position to secure supply of the battery metals and related upstream supply necessary to produce EV at multi-million unit scale, Jonas explained. In a slowing economic environment, we believe Tesla's gap to competition can potentially widen, particularly as EV prices pivot from inflationary to deflationary. To this end, the Morgan Stanley analyst gives Tesla shares an overweight, i.e. buy rating backed by $330 price target. The figure suggests the shares have room for 75% growth from current levels. Overall, the stock claims a moderate buy consensus rating based on 18 buy ratings, 8 holds, and 2 sells. To find good ideas for stocks trading at attractive valuations, visit TipRank's Best Stocks to Buy, a newly launched tool that unites all of TipRank's equity insights. Tesla Inc. dominance of the U.S. electric vehicle EV market as more brands sell cheaper options. Elon Musk's company accounted for 65% of 525,000 EV registered in the first 9 months of 2022, according to S&P Global Mobility. That market share is down from 71% last year and 79% in 2020 and could slide to just 20% by 2025. Tesla's EV market share shrunk to 65% in 2022, compared with 71% in 2021. Tesla struggles as more automakers break into the under $50,000 EV area. Tesla is also losing its lithium lead as General Motors and Ford make deals with lithium suppliers. Tesla's position is changing as new, more affordable options arrive, offering equal or better technology and production build, S&P said in the report. Given that consumer choice and consumer interest in EV are growing, Tesla's ability to retain a dominant market share will be challenged going forward. S&P expects there to be 159 electric vehicle brands by the end of 2025, more than triple today's 48. Tesla's lineup by then will largely resemble today's as rivals break into the market faster. EV sales are growing rapidly in the US, although they make up a small percentage of the total auto market. In the first 3 quarters of 2022, 5.1% of all vehicles registered in the US were EV, up from 2.8% in the same period a year earlier. Tesla's largest lead is in the luxury vehicle market, where it makes up 86% of registrations. It struggles to capture mid-market demand, however, because it doesn't offer many vehicles under $50,000. New EVs in 2022 offering choices in that market include vehicles from Hyundai Motor Co., Kia Corp, and Volkswagen Group, joining the Ford Mustang Mach-E, the Chevrolet Bolt EV, and the Nissan Leaf. Ford Motor Co. is Tesla's biggest competitor, holding 7% of registered EV in 2022 and 28% of the non-luxury EV. The Mach-E is the only non-Tesla car to be in the top 5 EV models by registration. Tesla's inability to adapt to new competition in the marketplace has hurt it in other ways. While the company has long been the biggest customer in the market for lithium, Ford and General Motors have begun striking deals with prospective suppliers to pay upfront. Tesla, which has long resisted forming partnerships with suppliers, is seeing its lead in lithium evaporate. Even as shares in the marketplace decline, Tesla will continue to see growth in unit sales. Before you feel too badly for Tesla, however, remember that the brand will continue to see unit sales grow, even as share declines, Associate Director, Auto Intelligence for S&P Global Mobility Stephanie Brinley said in the report. The EV market in 2022 is a Tesla market, and it will continue to be, so long as its competitors are bound by production capacity. Tesla's priority now is to work on a more affordable Model 3 that may allow it to break into the cheaper markets, as the Model 3 currently costs just under $50,000, although shipping fees raise this price. However, no announcement has been made on what the new price will be. Tesla's stock has fallen 54% in the last 12 months, outstripping a 30% drop in the Nasdaq Composite. Cathie Wood and ARK Investment believe this is only temporary. So much so that the investment giant has been loading up on Tesla stock, with the firm believe that it will reach new heights. We break down everything in this video here.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?